Today is May 23, 1:41 p.m. We detected unusual options on PayPal. PYPL is the ticker. And in this video, we are going to review and analyze these unusual options and then show you how we are trading PayPal based on these unusual options. So before we get into it, you can see here that on the charts, PayPal had dropped after earnings and all the way down to this 60.4 low for the year just a few days ago. And so is PayPal going to bounce from here, or is it going to go further down? That is the main question. So without further ado, let's get right into the analysis of these unusual options. So first up, these trades. This is a January 2024. It's 12:55 p.m. When we look at this is a ratio spread. You can see that 1800 times 2 is 3600. So what does this mean? Let's take a look at the chain on January 2024. So all the way here, when we look at that strike price, you'll see the 70 strike calls are over here. You'll also notice that the open interest, there was already 4,000 of them. So since this is greater than the 3,600, these could be closing orders. So we'll have to look at the other strike. So the other one at 57.5, however, you'll see this is actually the 1,800 that was done is actually opening orders, because you'll see the open interest was only 94. So based on this, we currently will have to wait to see what is going on with the 70 strike, because these could be closing orders. And this 57.5 we know is opening orders. So, and based on, if we look at the market structure, you'll see here this 11.75 was the price. The market was 11.65 to 11.80 cents. So this 75, where is it? Is it closer to the ask price of 11.8, or is the 75 closer to the bid price? Well, this is only 5 points away from this, as opposed to 10 points away from the bid. Therefore, this is more likely a buy at the ask price. And so what we think is going on here is that this was a purchase further out at the 57.5 strike calls. So this is quite deeper in the money. You'll see here that the deltas for this is actually 70 delta. So PayPal can still drop to 57.5, and it would still be in the money at that at expiration, which is still further away at 241 days out. Okay. Again, we will have to monitor this 70 strike here, if this ratio spread, because it could make it actually very bearish instead of being this moderately bullishness of buying the calls. So our next option to actually analyze is this last one here, done just less than an hour ago at 1:18 at the 18-second mark. So make sure to subscribe and hit the bell icon. You'll be notified whenever we see unusual options. This was for 1,500 of them, and all for the short term June 16th at the 58 strike calls and the 58 strike puts. So when we look at this trade here, this is just expiring in 24 days. You'll see these 1,500 here at the volume here at the put side. much greater than the open interest. Same with on the call side. Only one open interest. So we know these are also opening orders. So what we think is going on here is that they are selling this higher extrinsic value here on the call side, and then using that higher extrinsic value to buy an extrinsic value that is less. We think they are buying the 58 strike puts and selling the 58 strike calls. And what that does is it creates a synthetic short position. You'll see here. This is currently PayPal is at $62. As the price goes down on the x-axis, which is the price, this profit loss will go up above this zero line. Anything above is profit. This is the zero line here. And so anything as this goes up, this goes below it. And so this is a loss on the y-axis. So this is a short position. And you can see from the delta, it is a negative 99.85, basically like shorting 99 shares to get 99 delta, negative 99. So short term, it looks like PayPal is bearish, but longer term, there is more of a bullishness to it that it won't drop below about $57. So that is kind of our analysis, and the 57 is below the low of this 60. So that could be also why that there's this potential support at that level. You'll see PayPal actually for this year hasn't dropped that low. So it could be creating a lower low. But we'll have to see from there. 52 weeks. This is the 52-week lows actually. So quite low for PayPal. Let's look at it from a 3-year perspective. Also very low for PayPal. So something seems to be not going very well for this company. How are we trading this based on these unusual options? Well, let's take a look. For the June 16s, we are selling this 58 strike. Instead of buying it, we're going to take advantage of it and sell it instead. And by selling it, we're able to get this amount of extrinsic value. And then what we're going to do is choose the next expiration cycle on June 23 and buy the 60 strike puts here. So we're buying it for 1.3 extrinsic value. And you'll see here that it's currently going for $68. So not very much in the cost. And when we analyze this, you'll see here, this is, let's turn that off and just look at our trade. So this is a bearish diagonal trade. PayPal is at $62.34 currently. As it moves down, this will become profitable. As mentioned earlier, it is above this zero line. And so it's a short, and you can see here from our Greeks, it's a negative 11 delta. And there's not much of a theta decay, very minor, 0.04, right? And we want to take advantage of that volatility, Vega at positive 2, because let's take a look at the current volatility of PayPal. Very low, right? 2% implied volatility percentile. So we like this trade with a positive Vega because there's more potential for volatility to increase with PayPal. And then that would benefit this trade because it has a positive Vega. And so that is why we also like this trade. Okay. So this is our analysis of PayPal at this moment in time. And if you found it helpful or you enjoyed this review, please smash that like button. It really helps our channel grow so we can continue to share our knowledge and insights with everyone.